pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
All right, ladies and gentlemen, boys and girls, friends and savvy investors around the United States of America. I actually heard someone the other day was out of the country. I don't know why you would listen in from out of the country. I don't know anything about anywhere else but the United States and mainly Oklahoma, but I'm stoked to be here today in the studio with a great friend that I've learned to love over time because he saves me money. That's why I like him. Well, mainly because he's married to my wife's closest friend, high school friend that they grew up playing sports and doing all kinds of fun stuff. But it is my pleasure to introduce Damon Hamons from All American Insurance Services.
That's correct.
Right? And they are from near Weatherford, but they do offer insurance all over the place. All over the country, they can sell this policy that we're going to talk about, which is very intriguing. That's why I have them on the air today, for landlords. And the policy is called Lords of London. So anyway, but before we get into that, all that jazz, we need to think about insurance as an investors. That's the main reason why I love real estate, because the stock market, you can buy some stocks, and all of a sudden there could be some kind of crazy scandal. And then boom, you lose your money. Well, with real estate, you can buy insurance policy on a roof or a structure or whatever. There's insurance for anything. And if that house burns down, Damon, you're going to write me a check. Anyway, man, I'm so excited that you're on the show. So the cool thing about Damon here is not only that he's an insurance agent, he cuts it to the core, right to the facts. There's no trying to sell me on what I should get or what I shouldn't get. I just 5 minutes ago just renewed my auto insurance, and the guy was upselling me about 3 times on there. Well, recommended bodily is 100, 50, 100, but you should do 130. Also, you should get towing and roadside service. Like, sir, I already got AAA. Oh, we're cheaper than AAA. I'm like, buddy, keep going. And then at the end, after I paid him for my policy, he tried to get me to do my house as well. And I told him I'm in the meeting. I'm about to get on the studio with my insurance agent. Anyway, fascinating. That's the one thing I love about Damon. He owns real estate property. That's one of the main things, because he is an investor himself. He understands rental property. He has 8 of them, 8 units, a commercial property. He's savvy. He just loves insurance, loves to help people. And he was willing to drive all the way up here to be on the radio today. And so we're going to talk about insurance. Taboo.
Yeah.
No. All right. So if you guys don't know this, I have a lot of units out there. I'm blessed and lucky, or whatever you want to call it. And I have been with shelter insurance for a long time. A lot of insurance agents a lot of investors out there in Oklahoma City tend to use shelter insurance. And honestly, I've had great luck and a working relationship with shelter insurance. I've had a lot of big claims where I've had to have an adjuster show up. A lot of diarrhea moments, and why would I move insurance until it becomes a nightmare running insurance? I have an office manager, or general manager, property manager, whatever you want to call it, and Damon, she actually said that she spends 2 hours. She said a day, and I thought that was ridiculous. But every day we were getting 6 to 10 to 12 envelopes of policy paperwork.
Not anymore, right?
Not anymore. And, we're trying to calculate how much money were we just spending just flipping through paperwork that we never read or understood. And it changed like the wind, just like hail and wind claims. Just changed. So anyway, Damon, tell me a little bit about you. Tell me, I'm not an expert in insurance. That's why I only deal with experts like you. Tell these people out there, these investors, about Lords of London. What is it? How can people benefit from it? I know it's huge for me. Just the one thing that I can log in, add a house, take a house down, and then I have a bill at the end of the month instead of trying to itemize everything. So go into the benefits. How'd you hear about it? And I think it's sexy that banks used to use it or still do. So keep going. All right.
Well, I started in the insurance business back in 2005 with Allstate. Didn't take me very long to realize that there was a lot of holes. That's what I call them. Holes or gaps. Me and one of my mentors in the insurance business. I just didn't like the feeling when people would walk in my office and they had something that I didn't have a product for. So 2 years into the Allstate venture, I decided I've got to get independent somehow. To make a long story short, June 1st, 2012, I was an independent agent. I'd sold my Allstate contract and started a big journey in the insurance business. That I was in the insurance business 7.5, 8 years and thought, okay, I know all of this stuff. I've got all the I's dotted, T's are crossed. When someone comes and asks me a question, I've got the answer right now. Day 2, 3 in the independent business, I thought, man, there is a lot out there that I don't know. So it's been a learning experience for me. I have kept the same approach to the insurance business, is always trying to fill holes, trying to find a product that's best for somebody so that when they do call or they walk in, we have it. And not only do we have it, but we have a competitive price. And that's how I got with this Lloyd's of London program. We have several investors that we insured, and kind of along the lines of what you're talking about. I had a guy call me up. He had, I think, somewhere around about 7 or 8 units. They differed in what they were. He had like a $170,000 house that he wanted full replacement coverage on. He had a $20,000 something that's not even insurable with what we got. So it was all over the map as to what he had, and I thought there's got to be something better than quoting in 10 different spots. I've got some with national security. We're trying to go through Markel with this one, American Modern with this one. He's going to have, not only is he going to have 7 different bills like you talked about coming in on a monthly basis, but they're going to be different carriers. Some are auto draft, some weren't. And I thought, me. Yeah, I got to find something. So that just set me on that trail of looking for something else, and just started calling underwriters, looking for somebody who would do a list, who I could just list all the properties. And one of my underwriters said, well, we don't have that, but you need to talk with these people. And they gave me a number. I call the guy up. He explains to me how the program works. And I thought, you know what? This is to me, this is perfect for me, number one.
Because you're an investor too.
Yeah, exactly. And I started thinking about the people that would benefit. Number one, the client that I was quoting. But then, after I was halfway through that process, and I called you up, or I sent you a Facebook message. I said, "Man, you gotta check this out." That's something I haven't done. I think I'd known you 10 or 11 years, and I knew you were an investor. But I just never really. It's not my style to say, "Hey, you need to buy from us. We've got the best." Well, but we did finally, and I knew it, and I knew the price was right. So.
Well, and I knew that you lived an hour away.
Yeah.
And so I'm uneducated about insurance, and I just assumed that you couldn't do it. Or your prices would be high because you're in a different zip code, and your tax rate over there in Weatherford is, the sales tax is ridiculous. I bought my wedding ring there.
Yeah.
So I had to beat up Kelly's jeweler just to get tax free. But I really didn't know. And so let's cover the basics of insurance. Like, there's different types of insurance, right? I mean, for real estate investors, there's like EC. What is that? Is that the term?
Oh, yeah.
Okay. Fire only.
Fire and EC is what an insurance agent might tell you. The EC basically just stands for extended coverage. If you have fire coverage, you have fire and lightning. That's it. You have a hailstorm, don't call him. Don't call your agent because you've got fire. If you have the EC coverage, there's a few extra things that are added on. Wind and hail, theft, vandalism, or some of those. Right. Some of policies will include water damage if, it's something that happens accidentally and it's occurred here recently. All
right, let's stay focused because you just said this. Here's a random question. So I had a claim. I just finished a rehab of a house. People moved out, fixed it up. It was the week before Christmas, and I hear water. The place was flooded with 3 inches of water. I called the insurance agent, and correct the problem, but we're not going to pay for the plumbing bill.
Yeah.
Why is that? Isn't it a claim? He's like, because they wouldn't pay for the piping, but they'd pay for all the damage, but they wouldn't. Do you know what I'm talking about?
Yeah.
Does that make sense?
Well,
why is that?
It doesn't really make sense. I can't really explain to you why that that's the case, but I do know that that is the case. If you have water damage like that, they're going to pay for damage to your structure. They'll even pay the bill as far as the labor for the guy that comes out. But the plumbing itself, they don't pay for those for the parts.
You don't know? Okay,
yeah,
cool.
I don't know.
I was
But
just
it is,
fascinated
man.
about
That's hey, company A to company Z, they're all the same way, and they're, for some reason they don't pay that guy, or they don't pay the supplies. They'll pay the labor. They don't pay the supplies.
That's weird. All right, so we got EC, which is fire, okay, and extended coverage. And I even know what EC stand for.
Yeah.
What's a typical insurance policy that a landlord should get, or a real estate investor, maybe a passive investor? Is there just a basic, or what should we look for? What kind of coverage? And then we'll get into some numbers in a minute.
You know, the first question I always ask is, how is it owned? That is one of the most important questions that your agent could ask you, because you know what? I might be talking to John Smith, but John Smith may not own that house. It may be ABC real estate company that he has
LLC or something.
Yeah, and that, to me, that's the first question I ask is, how do you own it? And I see this problem on a daily basis when somebody walks in and they throw down their landlord policy and they say, "Can you help me on this?" And I see their name on there and I say, "Do you have an LLC?" And they say, "Well, yeah." And I think, well, that's the first thing we need to change, because right now this is protecting you, not your LLC. Yeah, if there's a hail claim, fire claim, whatever it may be, it may not be a problem. But when that tenant sues for whatever may be, the case, they have to sue the property owner, and the property owner is the LLC. It's not the person.
Right.
And that insurance company, when that comes in, you got a $500,000 claim involved, and they're like, okay, we're insuring ABC
company,
LLC.
not you.
We don't insure John Smith, so hey.
And that's a way out for insurance. Interesting. I like that philosophy.
It's not that they want to get out of it.
Oh, yeah, whatever. Since you work there, or you are one of those bad people of white-collared world of...
Man, that's the first question I ask. The second question I usually ask is, do you want your insurance company to pay this note off, or do you want them to replace the house? Because you buy houses all the time. You're like, hey, I just bought this. I need $35,000 on this house. And I'm like, okay, bang, there's $35,000. If it burns down 2 days later, you're going to take a check to the bank and say, man, we both lost on this deal, but here's your money. I don't owe you anything.
Right.
The other type of policy is something that will rebuild it from the ground up.
Yeah, and that was another question that I've had when we first negotiated the big contract that you took over all of our properties, was how, like, say there's a $100,000 house and I only have $60,000 in it, and I really only want to insure it for $70,000, but it's worth $100,000. Other agents are like, and Allstate's one of them, because I used to have Allstate. They would force me to cover $200,000 worth of coverage on the property because that's what it costs to rebuild it. But look, I'm just a real estate investor, man. I just want my $60,000 back out. How do you work? Is that, I know Lords of London does, like, whatever I want to insure it for is whatever I can get it. Right?
Whatever you want to insure it for, that's what you're going to get. Now the policy does kind of change a little bit. If you're not insured to value, and we say insured to value like insured to replacement value, in the situation you presented, there was a $220,000 replacement value. If you insure at that value to maybe 90% of that number, it is a replacement cost policy. And basically what that means is they're not going to depreciate anything. But if you go under that $220,000 replacement house, you want $60,000 or $70,000 coverage on it, it automatically change it to a cash value. If that thing burns down, they're going to take your deductible out and write you a check for the rest, and it's going to be over. And part of that is, that's just, this program is built for investors. It was originally built for banks. Allstate isn't really built that way. They're built to insure your house you live in, the cars you drive, and maybe you've got one house, and usually the typical Allstate landlord policy comes from a homeowner who buys a home in a different neighborhood and decides they want to keep the old one.
Right. And
they're going to just rent that out to somebody, so they might have one or two. And it's just, it's something that they offer for their agent to sell, but they are not really built to insure investment property.
And they're extremely expensive. They're almost like regular homeowner occupied.
Yeah. That's you know what? They're not going to invest their time and money in figuring out what the right rate is, so they're just going to double it. And if you want it, you're going to pay it, and they're going to be happy making money with it. Again, they put all their time and money into cars. That's why $600-700 million a year is put out there on television, and they talk about car insurance. That's where they put their money. That's where the product is going to. Yeah, it's going to be competitive there, and great product too. We actually sell insurance for Allstate now. We contracted with them, started up again this year.
Cool. And that's a great thing about an independent agent. Let's talk about that. What's the difference between, all right, like I have some background in insurance. A couple of my friends from college got into insurance. They bought a book of business, which was Allstate, which is very rare. If you didn't know that, you can build a business, build a book of business, and then now it's a tangible asset that you can sell. Versus shelter insurance, you're like a full-time employee with maybe one day you'll get some sort of a bonus. And it's just illusions. It's the carrot in front of the cart. But what's, a friend of mine who's an adjuster who has swore by independent agents, and he constantly refers them to me. But I always scared because are they going to go out of business? Like, I've never heard of All American Insurance Services, Weatherford, Oklahoma, in the middle of nowhere. But, you're selling me a Lords of London. Now, I've heard of Lords of London. That was the main reason why I jumped over there, and I did my own research. And, of course, I don't know if you know this, that I hired another person to read the whole policy.
Yeah, you told me that.
I was like, I don't got time to read 50 pages of this madness. And then my guy that I hired was drilling you all the time, and which was just an interesting thing because this is such a big, moving over hundreds of units over. But what's the advantage of, or is there disadvantages? Because like people tend as a high schooler, I guess jeans or name brand Nike shoes.
Yeah.
And do you have that conflict with people? Do you have to sell them, or are you just not going after that customer? Is it weird? And what's the difference between the two? If you can answer that. I know that's a bizarre question.
The biggest difference is the contract. When I was selling for Allstate, the agency name was Damon Hamons Insurance Agency. I was contracted with Allstate. Allstate's contract, at least for me then, was very specific and said that you are a captive agent. You can't sell for anybody else. You can only sell our product. And if someone walks in with something that we don't have, you have to send them out the door. No, you can't make a recommendation as to where they need to go. Now, I work as All American Insurance Services. That's the agency name, but we contract with I don't even know how many carriers we contract with or have access to.
Different types.
But they don't care. They're like, hey, if they're right for us, you sell us. If they're not, don't.
I was just thinking it's almost like a mortgage lender or a broker. Yeah. People go to a mortgage broker and they shop your loan and they get you the best interest rate, the best terms, depending on your credit score and your application. And then they get a fee to find a better deal for you. So it's kind of the same scenario.
Yeah, it's the same scenario. Imagine walking into a bank and maybe it's something community bank and you say, okay, who's got the best interest rate on this particular property? And, you got 15 different banks going, well, I can give you this interest rate. And another one goes, well, I can do a little bit better than that. And someone might say, well, I've got the same interest rate, but I can carry it for a 15-year fixed term, And so you're like, you know what? That sounds the best. I'll take it. It's the same thing when you shop with an independent agent. You give me your information. I put it all into our little program that we have. And 5 years ago, I got a piece of paper that said Allstate Insurance Company, this is how much your insurance rate is. Now I print out a page that's got Travelers, Hartford, Mercury, Progressive. Allstate is on there now. All of these carriers, and they list them out, and they'll show me price-wise, top to bottom. Now, I know the products pretty well, and if Mercury and Travelers and Hartford are all really, really close together, and I know how good the Travelers product is, the things that it has that others don't, I'll tell you exactly, hey, this is where it's at.
Now, of course, we're motivated by money. It takes gasoline to drive a diesel vehicle, and I heard that sucker pull in.
Yeah, I did, didn't it? That's right.
So
it takes some cash.
Is there motivation to refer? I don't know if this is illegal to ask this question or weird, but to refer different types of? Is there a percentage across the board? How do you get paid, and what determines what decision that you offer? Because you just listed 10 insurance companies, and I know I get it. You like Travelers because they may have free roadside assistance or something. How do you get paid? Do they offer different rates?
They do. They all are a little bit different in how they pay. There's, it typically is 10 to 15% is the commission that they pay us. Some of them have a good bonus program, others don't. I look at it as renewals.
Long term.
I get paid on renewals. I get paid from people renewing their coverage. When they come in and they buy an insurance policy the very first time, I look at it as, okay, I got my money back that I spent to get them in the door. It's renewal that really makes our money. And I don't really look too much into the commission as much as I am doing what is right the first time so that they renew or tell somebody else to come see us. So it's 10 to 15% commission wise, and there's some good bonuses, there's some bad bonuses, and you know what, they change them all the time. I could get caught up in, I got to sell something that's 15%, and then 3 months later I get an email from them and they say we're dropping to 12.5, and you're thinking, oh my goodness. So
or that customer leaves.
They leave, and yeah, exactly.
And I don't know you would probably know this statistic, but how many people do stay? I mean, I was on shelter insurance for over 10 years. Mm-hmm. I mean, you were throwing out some names earlier, American Modern. Mm-hmm. I've had Farmers. I've never had State Farm, Farmer Bureau, not Farmers. Like the investor that we met on the way in, she had Farmers. And I was like, look, this guy can save you 30%, because I know.
Yeah.
Because I help investors, and I look at their portfolio, and I'm like, you're paying $800, $900 a month on a $40,000 rent. I mean, a year on a $40,000 rental. That just logically doesn't make sense. Yeah, Farmers may seem like better coverage, and you hear a lot more people get paid out. You just Google up Allstate insurance claims, and you'll see there's a million people that hate them.
Right.
But if you don't buy the proper insurance, you don't get the proper claim.
Most of all the cases that I have seen where someone is not happy with their insurance company, it usually falls into the case that they didn't know what they had, and they're just, first of all, they're devastated. They've lost something, and then you're slapped with the as the agent, you don't have coverage for that. Well, is it even possible to have coverage, or were you sold something that you shouldn't have been sold? And most of the time, it's just something that isn't flat out covered. It seems like a lot of these claims that you read about, and State Farm is in the mix of all of that. It has to do with hurricanes, and
I didn't have
my
that.
policy says that,
or earthquakes, Oklahoma City.
Yeah, I tell you, the big fight was, did flooding cause this damage, or was it wind? Because the ocean is in New Orleans because of wind. So did wind cause my house to be flooded, or was it rising water? And, some of those companies flat out lose just because of the way their policy is worded, the legal wording.
And they
of
have
their
bigger
policies.
attorneys than you do.
They're bigger than me and you.
And they're gonna, that's the sad thing about insurance. I love the dog insurance, but it's hard because I like you. But like insurance people don't lose money. I mean, they say that they lose money. Oh, we took a $5 billion loss because of all this. But they don't lose.
In the end, they typically don't lose in the end. This is what I always tell people. The first thing I do is I have a piece of paper in my office, my last year that I was with Allstate, and it showed exactly how much premium dollars we took in homeowners insurance and how many premium dollars we paid out in claims.
Just, locally?
Yeah,
at your office?
This was just in my office. That was what it was.
Cool, that's a good idea.
It was about 120%. For every dollar we brought in on home insurance, we paid out like $1.20. Now that is before they paid me. That's before they paid the people that you talk to on the telephone, the adjusters that come out and adjust the loss. Now, they make money on the car insurance. So as a whole, they're going to make some money. And you know what? You really want them to. Our Lloyd's of London Corporation here, they've got billions in assets, and if you got $8 million in property insured, you want a company that's got some cash.
Sure.
So you want them to make money, but I understand what you're saying. When you're giving money to them, you're giving, and then you're like, okay, man, I'm in a bad situation here, and then all you hear is, well, you don't have coverage for that. Thanks for your cash, but
that reminds me of a story where when we sign a lease with the tenant, we make it very clear. We have a full page, 8.5 by 11 piece of paper says, we do not cover your contents, and we push the tenant to get insurance. Do you, and usually when there's something happens, like I have an apartment building and someone got flooded up on the third floor, ruined this gal's couch, and she's up in arms. She's pissed off. She wants me to buy her a new couch. And the first thing I say, ma'am, do you have insurance? And she says, no, I don't. I said, remember when we signed the lease, we'd encourage you to do that. And of course we make them sign off on it because just for any kind of legalities. And no, she forgot to get the insurance. Like you said, that's the main reason why people are upset, is because they didn't take the time to get the right coverage. Speaking of the tenant, do you have a program for tenants out there? If your tenant, you're listening to this, or landlords can offer a policy for an individual tenant. And then it's a two-part question. Do you have that? Which one should you recommend? What's an average cost? If you can remember all that. And part two of the question is, can I sell that to my tenants? or refer that, or is there a way that I could buy that and offer it as a service, but then I can be named in it, my corporation. I don't know. It's just a second question, but good. First question: what renters insurances do you know of?
There's tenant policies. Most insurance companies that offer auto insurance offer tenant policies. They really don't cost a whole lot of money. Just a basic tenant policy, and if $25,000 to insure their contents. And the most important part is liability insurance. I always go back to liability being the most important. $200 in Oklahoma. In Oklahoma, mind you. In other areas, I mean, the prices in insurance state to state vary. It's just ridiculous. But in Oklahoma, $250 is pretty normal for what we sell.
So it's roughly around $20 a month, $22 a month.
I mean,
$18.
to be honest with you, all day long, man, we sell $1,200 6-month auto insurance policies, and we just flat out say, hey, we can sell you a $25,000 tenant policy. It'll give you a 10% discount on this auto insurance.
Oh, that's a good
one. It's $240 a year for the tenant. So basically, it's like, okay, do you want to pay, $2,400 a year for auto insurance, or do you want to pay $2,400 a year for auto insurance and tenant coverage?
Sure.
I mean, to me,
logic.
Yeah.
What brand is that, or is that Allstate?
Allstate is one we use. Travelers is another. There's a couple. Like I could mention Hallmark. It's something you wouldn't know. Not typically something that we sell unless somebody just wants it. But Allstate and Mercury, Hartford, Travelers.
All right. I heard a tip that a savvy investor told me once if a tenant does have gets renter's insurance, and have them name the management company in the insurance policy for liability sake.
Well, it's not going to hurt.
Right. It's an added value, I guess you'd say.
Well, at the end of the day, somebody's responsible for whatever might have occurred. And if the landlord is responsible, the landlord needs their own liability policy enforced. And, of course, it needs to be titled correctly, not in the landlord's name, but in whoever owns the property. Is it the landlord LLC? That's the most important part. If the tenant is the one responsible, they're just going to pick that claim up. But I see that a lot, especially with commercial policies where we've got two companies and both insurance carriers, they want the other one listed on there with them. It's not really something that I look at, and I guess I do need to do a little bit more research, down this line, but it seems like it's just added protection that in my opinion, I don't know that it's needed. You got to have your liability in place.
Sure. All right, moving on to another question. One of the main reasons why I went with Lords of London is that the pricing is kind of fixed for the year.
Yeah, man, it's
and I like that aspect. And so that leads me into another question. Why, I mean, it seems obvious, but why do insurance companies' pricing is so different? And it could be by day. Like, for example, your car insurance is $3,000 for the year, and you're going down the line, you don't pay attention, and then another company offers it $1,500. This just happened to me on my own residence, where I was paying $1,500 with Allstate, or $2,000 with Allstate, and then I found Liberty Insurance was $1,500. I mean, it was such an extreme. We're talking thousands of dollars for coverage. Why does that change, and how do I, rule of thumb that I heard is like check your insurance every 3 years.
Yeah, that's a good one.
But why does that change like that? Is that willy-nilly? There's an algorithm? Is it just random? Is it why? Why does it change?
I look at it as a market. Some insurance carriers, they don't work on last year so much. They work on 5 years, 10 years. They forecast what they believe losses to be. They assess their situation probably on a quarterly basis, and sometimes they just come up and they say, you know what, I think we have too many houses insured in Oklahoma, and we really need to reduce this by 20%. That's one of the ways they're going to do it. We're going to increase rates. We're just going to increase the rates, and we project this is how many people will non-renew with us, and that's what we want to do because we've got too much exposure out there. So they don't really look at last year so much as a history of data and forecast what the next 5 years is going to, what it's going to bring, and that's where pricing, it comes into effect. If they think that the outlook for the next 5 years is pretty good and they want to insure some more property or cars or whatever it may be, then they price adjust for it and they bring a lot of people in. They drive the business, it's going to go up. But there's a lot of, to me, it's like it's just a market analysis of
or
how
a
we gonna
game.
make money? Yeah, it's
a game.
It's a numbers. It is a numbers game.
And so you, as a savvy investor, you got to be on top of it.
Hey, a savvy investor, a savvy insurance guy. That's another reason that independent was the way to go, because whenever one of our carriers, and right now one of them's Hartford, and they seem to me like they don't want to insure one house in Oklahoma. So everything is. I quoted one the other day. It was $7,000. I sold it with Travelers. It was $1,200.
Wow.
So
7,000.
7,000 was
That's
their
a
rate.
big gap. I'm like 3,000, 2,500.
It's pretty much like, Mr. Insurance Agent, do not quote someone with the Hartford right now.
Wow.
So, but hey, when that's the case, I've got somebody who's right there thinks, hey, 5 years from now we're going to be making money. We want insurance right now.
Well, I know that I was trying to find commercial insurance for one of my commercial properties, and it was a nightmare. And Hartford was the best deal at the time. And then I found a nationwide company called Chubb.
Yeah, Chubb.
And I have Chubb right now on my commercial property, which is the best policy I've ever had.
Chubb's a great carrier
to this day. And I'm not, and that's another thing. People, I don't want to leave insurance companies, but you make it sound like they're forcing you out. What is it like as an agent where all of a sudden, and especially in a small town, I mean, you deal with these people, you see them in the community, they know your name, they see your name, and all of a sudden, oh, by the way, Allstate went up 30%. And of course, you have a lot of lines. Well, those hailstorms, or down there at the Hurricane Turbo.
Yeah.
I mean, how do you? I mean, is that why you went independent as well? I mean, because people are probably pissed to F off. They're like, screw you, and they think you're making the money, but behind you is this All-Star thing is with a thumb on you.
Man, it's a lot different conversation today than it was 4 years ago. 4 years ago, man, that was the worst day of the week or month would be that email that would say, going into December the 15th for new business, we're taking a 35%, and they would 35% rate increase, and they would say exactly what you're saying, because we need to stay profitable and to better protect our insureds, and all this language that basically says, hey, we're raising up rates, dude. And I'm like, oh my goodness, okay, so I've got to sell how many policies between now and December 15th? And then the renewals are January 15th. And then what am I going to tell them? And then they're like, oh, yeah, just tell them how you can raise their deductible and all these good things and how great the service is and how awesome the product is. And I just think,
so you're
they can go across the street and get the same product, and that guy's got real good service. So I thought, hey, forget this. I'm out of this deal. I'm going to go and find – I'm going to get independent. I'm going to get 10, 12 carriers.
Now you're not controlled. The one thing I liked about it that I mean, of course, you're a landlord as well. Your name was on the freaking door. I mean, you're the guy I'm going to sue if I get a problem. I mean, no offense. I mean, I'm going to go after Allstate, but I mean, Damon Insurance, Allstate member. I mean, Arrows and Emissions. Did you have to carry separate insurance just because if you misquote? I swear there's been so many policies where, and I just know this in my own fact that like I thought I had this coverage, and this is a true story that happened on this building. And this is a shelter insurance thing. We have so many properties and we're not paying attention. I didn't want to call them anymore. I'm like, I can't call you anymore. We got to do this by email. So I'm emailing them back and forth. Yeah, your coverage. I didn't even know what GL meant. So we need to cover GL here in a minute. And there's a huge storm, and it blew out every window in the front of my commercial building here. I drive up there. I'm like, oh man, thank God I got insurance. The roof was tore up. I called Shelter Insurance. They're like, and this is almost the same concept of wrong name. It wasn't in your name. Mm-hmm. I'm sorry, sir. That policy was a residential policy. So my agent, who I insure 100 and some properties with, just wrote that policy under residential because he just assumed that every property we had was residential. At that time, that's the only commercial property I had. Mm-hmm. Man, I took it hard at the time. And I just learned that, man, I've got to get this under grasp of understanding insurance. But just that one, I mean, I feel like a fool that I was paying for this certain amount of insurance. And, I could have went for Arrows and Emissions, and there was some delay, and it was canceled, and I missed an envelope because we were getting 12 envelopes a day. Because they're just renewing at certain times.
Yeah.
You don't buy every house on the 1st of January. You're closing on properties at all different times.
Right.
But anyway, that was a weird situation that's very frustrating. What are the things you have to say? There was something I forgot to ask you, dang it, and I just forgot.
About the program?
Yeah, what program?
The Lloyd's of London program?
Let's talk more about that.
Well, you mentioned something about forgetting property because you have so many.
Right.
One thing that is really unique about the program is the ability for us to back up 4 months and add or change coverage. So, sometimes investors, mostly investors who have a lot of properties, it just comes up from time to time. You buy 3 or 4 or 5. Maybe there's an investor down the street that says, I'm out, I want to sell all 12 of them. And somewhere in the paperwork, there is one that is missed. Maybe we didn't get it in there. Maybe we've got it at $20,000 and you needed $120,000. Well, in this program, I have the ability to back up 4 months and make a change. So, if you buy 5 houses today and in January you have a fire loss and one of them's not on there, well, we've got the ability to back it up and slap it on there as the day you bought it, and they're going to pay for it.
Cool.
Coverage-wise, same thing, man. It's unbelievable.
I just like the service, and I'm, as I'm getting older, over 40. Oh God, just not just because I like you, and we even talk to you. We love that we can just set it and forget it, and then we get this bill, and it's all itemized per se. It's all one policy.
Yeah.
And the interesting thing, investors out there, I been going to conferences around the country for the last 3 to 5 years, and there is no insurance policy like this. There's one other one that I've heard about, and I called them, I sent them my portfolio, and they wouldn't get back with me. They finally got back with me. There was no savings per se. There was actually less coverage, and it wasn't a familiar voice. When I email or call you with a stupid question, I get it done, and I think you can provide that service because the software that Lords of London uses takes all that hard work out of it.
It takes a lot of the hard work out. Just to highlight the program, some of the things that you had faced that I'm talking with Liz about. You go and you find a property, it's $30,000. You go to the bank, you need evidence of insurance, of course, to close on that loan. And, you call your agent, you get the $30,000 on there. It gives you evidence of insurance. You go to talk to your banker. Everything is great. You sign the papers and it's yours. 15 days later, you get that letter in the mail that says, okay, well, we looked at your property out here and it looks vacant and we don't insure vacant property under blah, blah, blah insurance. Well, that is not going to happen. I mean, we can insure through this program. We can insure vacant houses, houses under construction,
dogs.
Yeah, dogs. It doesn't matter.
We don't tell nobody that though.
Exactly. No, don't tell them. Right? No.
We still don't do pit bulls, but I called you on that.
Yeah, they don't care. Vicious dogs. They don't have any exclusions for liability for animals like that. Which I'm like you. I always say, I don't. I typically hate lying. I don't like it when people lie at all. This program will cover that. But when someone calls me about my rentals, I always tell them, I say, well, I'm sorry, I love pit bulls and I know they're not dangerous animals, but my insurance carrier, they just won't allow it.
Well, that's my favorite line.
Yeah.
But we actually got duped on a house where it was a blue something pit bull, and, anyway, we come to find out it is a dangerous animal. So, and a lot of insurance companies, if you don't know this now, and a lot of rookie investors out there, they have shelter insurance or Allstate, or they don't even know that their tenant may have a Rottweiler or a pit bull in there, and if there's a claim that goes down, you are screwed. And they are adamant against those type of animals. And landlords out there, if you do have any of those type of animals, you need to read your policy and to know for sure. Yeah. And I ran into that problem. That's why I called Damon. We had a tenant that randomly had a dog in there, and we were about to evict him. And we were about to send him the 30-day notice saying, hey, this is a breach of lease. We're giving you a 30-day notice. And we called you first because we really didn't want to kick the guy out. And it was a high rental. And come to find out that, we were covered under insurance, and we just let it roll.
Yeah. So he's still there today, huh?
Well, he just got evicted.
Okay. Totally different reason.
But that was a couple months ago. So we made it through. All right. So I could see your goals of when you had the Allstate, and then you were kind of, your hands were tied, which is Allstate's a good company. We're not dogging it. Obviously, you sell it now. You're into real estate now as well. What's your goals? Do you want to have multiple offices? Do you want to have more rental property? Do you like both? Or what's your long-term goal? And it's unique because you are an investor in both ways. You're a business investor. You have a staff. You have two offices, right?
I have two. We have two locations, yeah, and definitely insurance is number one for me. That's what brings
bacon.
That's what brings home the bacon. So obviously that is number one. If I started everything over again at 19 years old, I'd probably go to work for a construction company because I truly love building.
Cool.
I love to build stuff. I got into the real estate. It just, everything came to a head at one time. I just realized how much I really did love building things. I was newly married, had a house, got to build a deck. And I thought, man, I just love this stuff.
Cool.
My wife's grandfather was 70 years old at the time. He had several rentals, and I thought, okay, these people bring cash to his door on the first of every month, and he's not even really concerned about things when a tenant moves out, because that gives him 2-3 weeks to mess around and fix the sink and change the carpet, paint the walls. He's always busy, not in a hurry. I thought, this is awesome. And then I meet you, and you mentioned the Rich Dad, Poor Dad book. And I don't know if you gave me that very first book or if I got it from somebody else, but I remember you mentioned something about it, and I read that. And like all that happened in like a 6-month period.
Cool.
And I thought, okay, this is exactly what I want to do. So if I could do it over again, I'd probably just get in the construction business and buy and build and all kinds of things. But insurance is number one for me right now. I do have a couple of offices. We've got, as you mentioned, 8 units. One is we have a 9th, which is a commercial unit. I want to buy just about, I'm kind of like you probably, always wanting another one, wanting another one. We just live in a smaller part of the area, and there's not a lot available, and it's not that frequent that something comes up. I'm in the best business possible to find new, because people come in with houses all the time. Do you own a house?
Or you want to sell it? Or drop it too? They want to drop insurance? Why? Well, I'm about to sell it. Or I guess they're too late. They've already sold it when they drop it.
Mm-hmm.
Have you gotten any deals that way?
No, I have not gotten anything like that yet. I bought everything I've got. I bought with no money down. You believe that?
Man, that's another episode.
Yeah.
I love no money down.
Oh,
no, I know did you figure out that eviction thing you had the other day?
Oh, man.
You're still dealing with that?
No, not anymore. I just, a couple of good messages, save the text messages, right? Keep them for records. And eventually they were hightailing it out of there. So
okay, good.
They're gone. And actually tonight when I get home, we'll go take off the insurance clothes, and I will be pulling out drywall in this place that is a total disaster. So I'm going to redo the whole.
Take pictures.
Yeah, I got the pictures of the now. Okay, we're going to take pictures of the later, but yeah, that one's I've got that piece of property is insured in the Lloyd's of London program, and it was tenant occupied, which satisfies most tenant policies yesterday, or actually 2 weeks ago, and now not only is it vacant, but it's under construction. And man, I cannot, if there's one piece of advice out there for investors that have a lot of property, when that tenant moves out and you start working on it and that goes past 30 days, most likely your insurance policy has a 30-day clause in there. Is it water? What is it? It's been vacant 30 days. Oh, well, hey, you're out of luck.
And I know that for a fact.
Yeah.
I know that my insurance agent, he was kind of cool and flexible, the shelter one. And he would, when is it going to be rented out? That was the number one question. And then I learned at an early time that it was going to, I just calculated the 15th within 30 days.
Yeah.
Because if it kicked it out, if they type it into the computer more than 30 days, because the computer asks for a certain date, it kicks it into a whole new policy, whole new rigmarole, the whole thing. So anyway, back to helping you out with the eviction. I have a case going down right now. One tip out there that I really need to stress is go buy a $40 little recorder and record your lease signings. And so I just, there's a terminology called, deadbeat tenant. We all know what those are. Those are non-payers. But another one is this tenant is a professional tenant. He is skilled at manipulating, but I'm glad that I recorded the lease signing. And I remember the property manager, she didn't want to record them. Now she's like, wow, that's awesome. Now we have audio documentation that we said this and you said this. And the main reason why we're evicting them is that they have dogs. And I remember in the lease, I signed this lease with this individual and I said, that we have no dog policy. And, we have pictures of, they have dogs in their property. And he, complained about some of the things. But when we show up to court with this audio, and how long has he been having these dogs? It's just an easy win. So you as an investors out there, take pictures, take audio, record the lease signing, be diligent as possible. All right. So that was another tip in there. Threw that in there. So tell me, what advice would you give to investors now about insurance? What's have you learned as being an investor switching from a national company to independent, what advice would you give?
Man, I still just go back to making sure that it's titled correctly, number one. Making sure that it's cash value or replacement value, number two. Do you want us to rebuild that thing, or do you just want enough money to pay your loan off? Man, deductibles are huge. You can save a ton of money with a higher deductible, especially when you own multiple units. You saw that for sure. Make sure you can cover it, though. You got $2,500. Man, I want to say... what was it? Man, I wish I knew the numbers.
I can't remember.
$15,000. That was something crazy. You're like, yeah. I mean, are you kidding?
Yeah, that's interesting. Deductible is very important. That was another thing that frustrated me with my last agent, is when we finally started really thinking about leaving. We saw policies with $500 deductibles. Yeah. We saw policies with $1,000 with random numbers. Like, how could this be so confusion? Because it's just so much paperwork. And it's our responsibility. I mean,
yeah, and then you know what? To answer that real quickly, you had these policies with this particular carrier for a period of time, and their policies change. And each one of those houses were on their own policy. You mentioned $500 deductible back in about 2007 or 8. It pretty much became impossible to get a $500 deductible anymore. So anything you had purchased before probably had a $500. Anything after that, it was $1,000. Later on, it's 1%. So it's just always changing.
Wind thing went to 2%. I know some investors have a 2%.
2% wind and hail is pretty common. Our program doesn't deal with percentages so much. The one I sell most of the time is that $2,500 deductible. You tell me what you want, we insure it. If you want replacement, we give you replacement. If you want cash value, we have cash value. Is it vacant? Are you working on it? Is it occupied? It doesn't really matter. You just let us know. We program it in. $2,500 comes off the claim.
Awesome.
Oh yeah. It's one policy. You got one piece of paper in the mail, all of it's in an Excel file, so you can go right online, export it to Excel.
This turned into the Savvy insurance sales program, but but the only reason why I'm even mentioning it, because a lot of people just don't know, and I do get a call at least once a week from some investor. Who do you use for insurance? I mean, I literally get that call once a week, especially after storms. And my second call is, I have a claim. What do I do? Pray, but no. Just document everything. It's I used to be so scared of that, and my rate's going to go up. And that's not the case. I mean, this last year, I had like 13 or 14 claims, and when I moved over to your policy, it actually reduced that.
Yeah, our program, there is no surcharge for claims. You either fit in the program or you don't. They looked at your claim history, and I remember speaking with the underwriters directly about it. There were several claims, but they were all on basically the same day. It's not you didn't have you weren't showing like a claim frequency. It happens. I mean, claims do happen. You have it there because you know that it possibly can happen. Now, if you had a fire claim every 6 months, or something crazy that paid you some good cash, and that was happening every 6 months, then they're going to be like, you know what, we're just not going to offer on this thing. But as far as claims are concerned, no, there's no surcharge for claims with the program. You file a claim, you get paid. Cool. You're not going to see a rate increase. Of course, they're going to review it every year. Man, golly, this guy, everything was clean. These claims get paid, but now we've got fire. It always seems to be the same kind of fire loss. Yeah. What is going on with this thing?
No, that's good. I hopefully that gives you, some investors out there, some peace of mind that you don't have to like cut corners or dodge situations just so you can have favor with the insurance agent. Because I think that they're aware of that. And I think that's one thing that I learned on my own residence, that I had an insurance guy, a roofer knock on my door, and I wasn't going to call a claim because it wasn't leaking. And this is a long time ago, and I was still nervous about insurance. Even though savvy investor, savvy landlord, I don't know it all, and I for sure don't want to read paperwork. And I don't want to read policies in 8-point font on the back of a freaking piece of paper. That's the last thing I want to do. But the guy said something that was very powerful. He's like, you need to make a claim. Everyone else is making a claim. Your insurance rates are going to go up anyway. Like my mind, why am I sacrificing taking a risk and not getting something that's due me for something that I've been paying into? And sure enough, I got a claim. It was no big deal. I got it just worked out to be great. But I mean, literally my whole neighborhood got claimed. And I found out through this kind of process, and I'm still ignorant about insurance, that they zone certain areas, like anything that's, this storm on this day from June to April or whatever, or those 3 months is the war zone for insurance.
Yeah.
The guy just jumped out of his car, filled out some paperwork, wrote me a check, and went on because he had 30 other claims in that neighborhood.
That's right, yeah.
So just peace of mind out there. Have you ever heard of that before? Or?
Oh, yeah, definitely. Anytime there's think about it from the insurance company's perspective in court. There's a hail claim on 30 houses in a neighborhood, and the insurance company's denying yours.
Sure.
They're really going to go sit in
case.
front of that exactly. You've got a case. Now, does that mean if your neighbors are filing insurance claims, getting new roofs, that you're supposed to get one? Well, maybe not. I always go back. I'm kind of like you. Like I said, I like to build. You got a construction company. You talk to roofers all the time. I file claims for people all the time. I talk to roofers all the time, and I know that ventilation is a huge deal in the state of Oklahoma. And if your house has got great ventilation and your neighbors don't, well, they may have damage and you don't. But yeah, back to what you were saying. That's not a case that they're gonna. That's not a case that they're gonna lose.
Is that your phone?
Man, I think I just accidentally pushed all these.
Oh,
how did
radio?
I do that in my pocket? That's
awesome.
It's not my ringtone.
All right, let's solve
my music.
This is our song that you're jamming out on your way back home. All right, here's one thing, another tip that I think would be awesome to tell people. I heard that if you have a claim on your roof and it has 3 trades, you actually can qualify for more money. Does that make sense? Have you ever heard that terminology? What's that called?
When it has 3 trades,
like
you
if I
have 3 different people come out.
Yeah, like you can get 10% more for profit and loss. Some adjuster taught me this, that like if you call in an insurance claim, and it's fine, they give you the insurance on the roof. But if you have like a damage on the gutter and they ruin the siding and they ruin the roof, you have 3 trades. You have the ability to get an increase in profit. And does that make sense? Am I ringing a bell?
It makes a little bit of sense. You're using 3 different contractors, and they have extra costs built in.
Right, and I think it was called a increased profit or something. That's if you GC it yourself. If you general contract it yourself, you have a potential to make an extra 10% on the overall claim, because you're handling all 3 trades, apparently.
Well, if you're a general contractor, a lot of times general contractors, they're not doing any work. They're just finding the workers for you. They slap 10, 20% on there.
For profit.
Yeah, so I can see where they're coming. I haven't actually come across that where there's 3 trades involved. You're acting as the GC on the deal. You're getting the roofer and the different guys coming out there, and you're able to slap on another 10 or 20%. Yeah, I can see where they're coming from on that. Okay. You done the work. You found the guys, right?
Right, and they paid it because, I don't know. Anyway, so if you have any insurance questions, or if you need to change your insurance agent, not your agent, but your policy is what I recommend. You need to check out Lords of London, Google it up, but ultimately you need to check out allamericanoK.com. That's All American Insurance Services, Damon Hamons. Give him a try, give him an opportunity just to see what and compare. I just changed out my car insurance today. And I from $3,000 went down to $1,600.
That's pretty good.
And I probably would have just auto debit and just kept on rolling. Yeah. So that website again is it's American.
It's allamericanoK.com. AllamericanoK.com, and that's us.
Awesome. Well, Damon, it's been a pleasure, and I have to bring you back out when you have some other insurance claim. Maybe we can have a subject on no money down.
No money down
for the insurance guy.
Yeah, hey, you know what? We've got that.
That's awesome. All right, thanks for coming. And friends and family and savvy investors, go buy assets and get them insured properly.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook, and always be buying assets.